Hello everyone. Our topic for today is accounts receivable. Receivables are financial assets that represent a contractual right to receive cash or another financial asset from another entity. For banks and other financial institutions, receivable results primarily from loans to customers. For retailers and manufacturers, this is classified into trade receivables and non-trade receivables. Trade receivables are claims from sale of merchandise or services. It can be an accounts receivable, which is a claim not supported by promissory notes, or a notes receivable, which is a formal promise in form of notes. Non-trade receivables, on the other hand, are claims from sources other than sale. Now, it's time for us to ask, is the trade and non-trade receivables realizable within a year? If yes, then it is a current asset. If no, then it is a non-current asset. Both trade and non-trade receivables, however, are presented in a one-line item in the balance sheet, named Trade and Other Receivables. However, the details to such is presented in the notes to financial statements.
So now we are going to talk about examples of non-trade receivables. So A is advances to or receivables from shareholders, directors, officers, or employees. If it is within the year, then it is a current asset. If it is not, then non-current asset. Actually, guys, all of this, if it is within the year, then it is a current asset. But if it is not, then it is a non-current asset. So B, advances to affiliates. So these are normally long-term investments. So normally non-current assets. Yeah. Then again, if within the year, then current asset. Advances to suppliers for acquisition of merchandise. Suppliers. So this is current asset if it is silent, because normally you purchased merchandise to your suppliers for goods that you will sell within the period. Subscription receivable, this is when you purchase shares, so this is normally a current asset. Creditors debit balance, so creditors, what is the entry of this, guys? It is debit cash, credits, accounts payable, notes payable, or any payable there is. So we receive cash because we loan, or we have a notes payable or accounts payable. Thus, the normal balance for this is credit. So when would it have a debit balance? This is when we have overpayment, meaning we give them more than what we owe them. So if our payable to them is only 100,000 and we give them 150,000, so we have a debit balance of 50,000, or maybe we have a return. Normally, if silent, then it is a current asset. Special deposits on contract bids. So this normally remains outstanding for a considerably long period of time, and silent is non-current asset. But if within the year, then current asset. Accrued income. So This is when money has been earned but not yet received. Then we used accrual in our accounting. So we recognize already income, but we still have receivables. So this is non-trade receivables. What are examples? Dividend receivables, accrued rent, receivables, accrued royalties, interest, and etc. Claims receivable. This is when we have claims um, against third parties made free from common carriers for damages or losses and damages, or claims um, for tax refund. So these are normally classified as current asset. So when we said normally, guys, this one is non-current, current, non-current, current. These are its um, classification if silent. But if it is given that it is within the year, even if it is an uncurrent, then it would be a current. So if it is given that it is a current, but um, it would be realized more than a year, then it would be an uncurrent. So these are just under classification if it is silent. So if silent na siya, guys. Now let's talk about customers' credit balance. Diba kaniha it was creditors' credit balance. Now it's customers' credit balance. So customers, guys, what is the normal entry? So we have what is the entry for this? AR, then sales. So the normal balance is a debit. However, it would become a credit if it is the customer. So it is the customer who has overpayment or return or allowances. So this is meaning they pay more what they owe us. So in effect, it is our current liability. And it is not offsetted against debit balance from other customers. Well, it's given in the book unless immaterial. So let's have an example, guys. For example, the accounts receivable controlling account reports a balance of 500,000. So this 500,000, it is the sum of the amounts from customer A, B, and C. So let's make a trial balance, guys. Not a trial balance, it's a T account rather. T account. So this is a T account. It forms like a T. Suppose we have a sale from customer A worth 800. So what's the entry for this, guys? This is AR, then debit sales. So muna siyang debit siya. Then we have collection worth 400. So sale, then AR. So mount credit siya. So what is the balance? We have a debit balance of 400. So we have a remaining balance of 400. So when we add that, 800, 400 plus 400, so 800. So equal silang duha. Then mo na lang niya to ang remaining balance. Okay siya. Itong AR. Then sa customer B, sales na to is 600. This is 1,000, guys. And then we have a collection worth 450. So 600 minus 450. So we have a debit balance or remaining balance sa to ang AR for customer B of 150. 600, then 600,000. However, for customer C, guys, we have sale 500,000, collection 450. But customer C returned what he purchased from us worth 100. So now 500, then 450 plus 100, so it's 550. So this area here is 550, and it is only 500 yung iyahang utang sa atua. So we have now a credit balance rather of 500. So in effect, kita na maoy na ay liability niya na 500. So this 500 here, nakuha na siya by adding 400 plus 150. It's 550 minus 50. So we have 500. However, as I said earlier, this is a current liability and should not be offsetted against our accounts receivable. So our true value of our accounts receivable is 550, and we have a current liability of 50. So that is how you record customers' credit balances.
Initial measurement of accounts receivable. It is measured initially at fair value of the consideration given plus transaction costs that are directly attributable to the acquisition of AR. How do you acquire AR? It is through sale of goods and services. Hence, the consideration we are talking about are the products you are selling. Short-term receivables, however, are recorded at face amount. It is not discounted. For remember, short-term means realizable within a year. Hence, discounting it is immaterial. Subsequent measurement of AR. It is recorded at amortized cost or net realizable value or NRV. What is NRV? It is the amount expected to be collected or estimated receivable amount, meaning there are possible deductions to our initial measurement of AR.
So we already discussed that the our AR is recorded at NRV. And I said it means that there are possible deduction to our AR. Maunang NRV siya. What are these deductions that I'm referring to? First is allowance for freight charges or freight charge. B is allowance for sales return. C is allowance for sales discount. And lastly is allowance for doubtful accounts or bad debts. So we're going to explain them one by one. Let's start with allowance for freight charges. But before we go deeper to this, let's first know what are the two types of freight charges. One is freight in. Second is freight out. So in, it actually guys is kanis lang duha, mo siya ang kanang ibayad nimo sa courier. However, it would be an in or an out depending on the point of view we are looking at. If we are on the point of view of the buyer, the one who will receive the goods, so it is freight in, hence in. If we are on the point of view of the seller, the one who give the goods to the buyer, of course, who sells the good, then it is freight out, hence out. Outside our premises man. So the goods will go out from the seller. Then the goods will go in sa buyer. So mo ng freight in and freight out. So it depends on what point of view we are. So what point of view we are right now? We are at the seller because we're referring to AR. AR. So we record AR as debit AR, then credit sales. So we are imagining as if we are the seller. So that's it guys. We're talking about freight out. So what charges? Freight out. Now let's go deeper to it. Let's talk about ownership now. This is what will happen when a good or a goods is purchased. So this is a warehouse. This is the seller. So let's just say this is the goods. Then the seller will give it to a common courier. May it be a ship or a truck. Then after it would go to the buyer. So ang yahan ni is seller to courier, courier to buyer. Now we are referring to ownership. If per agreement of the parties, the ownership of the goods transferred to the buyer the moment it leaves the premises of the seller. So the moment magawas na siya dinhi, or the moment mahatod na siya dinhi, then it is FOB, shipping point. So also may it be noted that ownership also equates to recording, to the recording of the freight. So whoever owns it records it. So if it is FOB shipping point, who owns it? The buyer. Who should record the freight? The buyer. Then what is the freight account name? Freight in. Now, if ever their agreement is the ownership of the goods will only transfer, if ever dili siya ma-transfer dinhi, hindi man daw siya ma-transfer din ha. Ma-transfer na siya ang ownership, na-receive na siya sa buyer ang actual goods. So, if ang goods na siya dinhi, para pa makaingon ng buyer na he owns it, then this is FOB destination. So, ganiha, katong dili pa ang ownership, it is FOB shipping point. Then, if ang ownership is igabot na dinhi, dili sa kaning star, then FOB destination. So, if FOB destination, who owns the goods if ever in transit pa siya? It is the seller. Who should record the freight? It is the seller. What freight account? Freight out. Now, we are studying accounts receivable. What point of view are we? Seller. So, what shipping point is relevant to us? Is it FOB shipping, or what FO ownership agreement is relevant to us? Is it FOB shipping or is it FOB destination? Of course, it is FOB destination. So, we're talking about freight out and FOB destination. So, klaro na tani, guys. Freight out, then FOB destination. Because we are the seller. Now, let's clear it again. Let's talk about actual payment of freight. If it is the buyer who pays it, it is termed as freight collect. If it is the seller, it is freight prepaid. Now let's go back to the ownership agreement. FOB shipping point and FOB destination. If it is FOB shipping point and it is silent about who actually paid, then since FOB shipping point, it is the buyer who owns it, so silent na treatment is freight collect. And if FOB destinations, it is the seller, then it is freight prepaid. So, normal, FOB shipping point, freight collect. If silent. Ngayon, FOB destination, freight prepaid. Kaya para buyer ang ownership, buyer po ang nibayad. Seller ang ownership, seller po ang nibayad. However, guys, both parties can agree man na bisag destination siya. So, dapat unta ang seller, pero ang buyer man nibayad sa actual na freight niya, FOB shipping point. So, dapat ang seller ay ang buyer. Pero, ang seller mo inibayad. Actually, paid. Sa kanin duha, ang useful sa to kay kani. So, FOB destination, then ang buyer mo inibayad. We record here, freight out. But, it is the buyer who actually paid. So, what is the effect of it? If inig ka, human na sa term sa AR, mubayad na ang buyer. Ang kantong iyang gibayad for the freight, we are to deduct it sa ato untang madawat sa iyaha. That is why we have allowance for freight charges. Mo allowance ta sa freight charges if ever ang buyer maoy ni buyer paid the actual freight. So, if the buyer paid the actual freight, so mao nang natin allowance for freight charges, guys. Later on, we are going to deduct it sa ato ang madawat na cash. So, there is only an allowance for freight charges if it is FOB destination and it is freight collect. And what freight freight charge account we're going to use? Freight out, because we are the seller. Now, let's go to an illustrative example, guys, so that we can visualize it more clearly. So this is the problem, guys. An entity has a 100,000 accounts receivable at the end of accounting period. The term is 2, 10, and 30, and it is FOB destination and freight collect. The customer paid freight charge of 5,000. So FOB destination, we record the freight out. Freight collect, so we'll record the allowance for freight charges. So, how to record sale? Of course, record AR worth 100,000. Now, record our freight out. How much? This one. 5,000. Now, we record our sales. How much? 100,000. Now, if kuan pa ta ni siya, guys, freight prepaid pa ni siya, we directly record cash. 5,000. Okay, kita man ibayad ang pasabot sa freight prepaid. However, it is freight collect. So, that's why we record allowance for freight charges worth 5,000. So that's why we record allowance for freight charges, guys. And now, to record the collection within the discount period. So within discount period, so kanidiri. Because this is a sales discount and we are going to discuss this later when we discuss allowance for sales discount. So, entry. First is we credit our AR. We're just going to use red ball pen. So, credit our AR worth 100,000. Now, we record our allowance for freight charges. So allowance for freight charges, 5,000. And then, since it is within the discount period, so we have sales discount here. How much? So it is 100. How much is the sales discount? It is 100,000 times 2%. Okay, 2 over 10 man. So, pasabutan ng 2 over 10 is 2% if mo pay ka within 10 days. So, 100,000 times 2%. So, it is 2,000. So, pila ra ang cash na dawat na to? It is 93,000. So, in effect, guys, butang ato diri dapita, you have a receivable worth 100,000. But then again, ang nibayad sa imong freight is ang imong buyer. So, nibayad siya sa imong freight pag padong na nimo deliver sa goods sa iyaha. So, since what I said, we are to deduct it sa ato ang receivable, so we will deduct 5,000. And now, if dili pala ni siya within the discount period, guys, na 2,000, mo na nilargo ato ang ato ang cash na madawat. Mo na siya largo, 95. However, ni-avail pa siya sa discount, guys. So, mag-minus pa siya to. So, ang ato na lang cash din na dawat is 93. So, kani. So, that is allowance for freight charges. Now, next, guys, is allowance for sales return. So, there are really instances that the customer would return the product. For example, there is a defect. For example, na return, there is a defect or wrong product na nahatag or any other reasonable excuse. So that's why some company really have allowance for sales return, especially if they have experienced it in the past. So, what is the entry for the allowance? It is sales return, and it is allowance for sales return credit. So, for example, lang 50,000. Remember, guys, this allowance for sales return and katong ganing asset na allowance for freight charges are deductible or should be deducted to our initial measurement of AR in order to get the net realizable value. So, to siya sa allowances, guys, of sales return. Now, next is allowance for sales discounts. This is what we're talking ganiha. Sales discount, guys, are actually cash discount. So, ang cash discount, where does siya freight charge, guys, na it depends sa point of view. So, if we are going to go to the point of view of the seller, so it is sales discount. If sa buyer, then it is purchase discount. Pero same ra na sila gipasabot. Depende na on which side of the coin you are in. So, kita karon is, of course, sell kay AR. So, ano na siya, guys. So, how to read this? So, I told you, you have a 5% discount within 10 days ka mabayad. Then, payable siya 30 days. If malapas og 30 days, guys, it is term as past due. And we are going to discuss this um, later on. So that is sales discount. This is how you express sales discount. Now, let's talk about the methods of recording sales discount. How does a company records a sales discount? First is gross, the second is net. Gross is mostly, it is the widely used, guys. Actually, most of our clients before are using gross because it's easier. So, gross, from its word gross, we're going to record sales gross of discount. Net is net of discount. So, let's have this illustration so that we can really picture out, guys, what is happening. So, ato lang na siya i-divide into 2, ha. So, wait, guys. Here. So, gross method daw. There is a sale of merchandise for 100,000, terms 5, 10, and 30. So, gross. So, sales 100,000. No, it's rather accounts receivable 100,000. Then sales 100,000. For net method, AR sales. So it would be 100 times 95%. Why 95, guys? Kaya ang discount is 5%. So 100% minus 5%. So yung mga madawat na lang is 95%. So muna siyang 95% ang largo pagkuha sa net. How much is it? So it is 95,000. Then sales 95,000. See? Gross net. That's just their difference. Now, assuming the collection is made within the discount period. So within 10 days. Within 10 days. 10 days. So how to record it, guys? Of course, first thing first is we credit our AR. So AR, how much? 100,000. Now, the sales discount. How much is the sales discount? 5%, which is 5,000. So, though you receive cash worth 95,000. Here, since you already deducted the discount, so you record cash 95,000, AR 95,000. So see, same effect. Now, assuming it is made beyond a discount period. So, cash 100,000, AR 100,000. Here, you receive cash, AR, ang credit. So, first na to ang AR. How much did you credit it sa AR? Ay mo mong debit o na kay 95. So, we are to credit AR for 95 still. In order para mawa siya sa picture. Then, how much do you receive? How much is the total cash you receive? Of course, same ani niya, 100,000. Why? Because the customer didn't avail the discount. So, intact na 100,000 na itong madawat. Now, there is a difference, 5,000. What is this? This is sales discount forfeited. This is sales discount forfeited is other income for us. Other income ni nato, guys. So that is the two-way this is the two-way to record sales discount. Gross, net. Now, let's talk about the allowance. So this is allowance of sales discount, guys. This is the third one, right? So why do we have an allowance for sales discount? If customers are granted cash discount for prompt payment, then based on our past experience, most of them would avail the discount. For example, 210 and 30. Sa atong past experience is ma-avail yun sila ani, guys. So might as well have an allowance daan. So how do you record it? Sales discount, then allowance for sales discount. For example, 50,000. So this is reversed. Reverse next period in order that the discount can be then charged normally to sales discount account. So that is the reason nga naman sila sales discount, guys. Next, guys, is the last one. Deduction to AR to get the NRV. Allowance for doubtful accounts or allowance for bad debts. There are two methods on accounting for doubtful accounts, guys. First is allowance method and direct method. The allowance method is, this is the method that you have allowance for doubtful account. Direct method is you only deduct AR when kaibaw na jud ka or deemed worthless na jud ang AR. So ang kaning allowance, guys, is estimate naman ni feel nimo worthless. Diri sa direct walay feel magdeduct ra ka sa AR if worthless na jud siya na tinuod. So what do I mean by worthless? Since this is accounts receivable, guys, nandiyan na tendency that customers will not pay AR. So ilang receivable nimo. So that's why we record daan. Na-feel na ko dili ni siya mo-pay na ni na amount. So record daan sa kadtong feel nimo na di nimo ma-receive na daan sa imuha. So if we use allowance method. If direct method is i-credit na nimo largo ang AR if ever worthless na yun siya. Like, the customer na ingon nimo, di siya kabayad, may file na siya bankruptcy, na siya evidence sa imuha na di siya kabayad. So, mo na siya ang direct. Let's give an you call this illustration. So, mag-illustration tayo, guys, para this is the best way really to know the difference. First is accounts 300,000 are considered doubtful of collection. Doubtful ra, guys, So record ka doubtful accounts, then allowance for doubtful accounts. So 30,000, 30,000. Write-off, direct write-off, guys. No entry. Kaya feel naman mo, guys. Wala mo na customer doubtful na siya. So, no entry. The next is accounts are subsequently discovered to be worthless and uncollectible. Kano siya is tinuod na jud na di na jud mo siya makulat. So, what you do is add then AR. Worth 30,000. 30,000. Now, are sa PCAS, guys? What do you do? Of course, bad debts or doubtful accounts, 30,000. Then AR, 30,000. Then now, the same accounts that are previously written off are unexpectedly recovered or collected. So, write off na nimo siya, hanggang na nimo. But, unexpectedly, nakabayad ang customer. Nakadaog na siya gloto, guys. Maybe nakadaog siya gloto. Or, I don't know the reason, nakabayad na siya balik. So, how do we record it? First, ato sa siyang i-reverse. So, AR ada worth 30,000. And then, after na nag-reverse, guys, mag-AR, magkuha na sa cash. Cash, then AR, worth 30,000. So, muna siya yung entry. Next, guys, is there is a PCAS. So, same, ato sa siyang i-reverse. So, AR, bad debts, 30,000. Then, cash, AR, 30,000. So, muna siya, guys. Let it be noted that under IFRS, this is not permitted, guys, on direct write-off. Because we are into accrual basis, guys. So, even if wala pa siya na doubtful, we make an assumption or a judgment that there is a tendency that it would become worthless through time. That's why we really have an allowance. So, muna siya, guys. Then, next is recording na siya sa doubtful accounts, guys. If ever, the granting of credit and collection of AR is under the charge of sales manager. So, it is, sales manager. So, distribution costs siya. Admin siya if other officer ang ni-grant sa receivable o ni-grant po sa collection. Then, if silent, kay administrative siya, guys. Administrative siya. Now, we go back sa katong deduction, sa atong mga deduction, guys. What are the 4 deductions to AR? If you can remember. So, 1 is allowance freight charges. 2nd is sales return. 3 is sales discount. Full siya allowance, guys. Then, 4th is allowance to doubtful accounts. So, freight charges, this is if FOB destination freight collect. Sales return, in case may return from customers. Sales discount, if you have a prompt payment. Doubtful account, if you see that there are customers who can pay in the near future. So, yan siyang upat, guys. So, ang kuha na niya na, itong gibawaan na, is we have our initial measurement of AR, so initial Dayon, less na to siya sa allowance free charge, less allowance sales return, less allowance of sales discount, less allowance for doubtful accounts. Now, we have the net realizable value. So, muna siya guys. Ang atong discussed. So, this is the subsequent measurement. So, that's it guys.